Alright guys, so I'm going to tell you something very interesting, some interesting point about stock market in America. Okay, do you know that the losses in stock market cannot be used for deducting out of your taxes? You cannot get a tax write-off on your taxes, on your stock losses. Did you know this? It's a very, very big thing. Let's say you buy a Subway, an asset, and it appreciates in value. When you sell it, you make running profit, you pay taxes on it. That's a separate story. But let's say it appreciates in value and then you sell it at a profit. Then you have to pay either short-term capital gains or long-term capital gains. Did you know that how much is the long-term capital gains? Do you know that? 35% in California, almost 35%. Do you know what is the short-term capital gains? Equivalent to your income, 60%. That means if by a stroke of luck your thing appreciates, 60% will be taken if within 1 year, it will be taken by Uncle Sam. But chalo, you will sell it probably after 1 year. So 30 to 35%. Because there are slabs, so that's fine. 20% flat rate federal. California will treat as a regular income, even in long-term capital gains. Just look at the exploitation. But very interesting. So if you gain, you will lose. But let's say you lose the value of the Subway, and it's a 200,000 Subway you bought, and you sold it for 150k. Do you know that you can use that 50k loss to write off against your income? So that means, let's say your income is 300, you will pay taxes only on 250k. So that's the thing. You can write off that 50k. Okay. Now, let's say you buy stocks. If they appreciate in value and you sell it within 1 year, you have to pay 60% tax. Yes. If you keep them for more than 1 year, you have to pay 35% tax. So far, so good. Okay, Uncle Sam, no problem. If I make money, you take taxes out of it. No problem. But if it depreciates, that means the value of the stocks go down by 50k, then how much do you get? Guess. Make a guess. You get no tax write-off. Right there, it is basically unbalanced. Stay away from stocks as much as possible. By God's grace, if you make some money, there will be so much long-term capital gains tax that you won't justify your decisions. It won't justify the risk that you're taking. If it goes down, you will not make any money. You will basically lose money and you won't be able to write it off. It's right there, very poor investment. In my mind, if you're doing stock as a stock thing, if you're playing in stocks, as a passive, thinking it's a great passive source of income, no, you will not make any money. I'm telling you now, quit stock market right away. It's not worth your time. If you're doing it passively, it's only a mechanism to buy the operators and the big guys out there to extract money out of you. Remember, I said that no profit, more risk, more loss. And I also told you it is definitely not true. More risk, more profit. It is true for Warren Buffett, by the way. More risk, more profit. Maybe less risk, more and more profit. For Warren Buffett, is correct. For Indian stock market gurus like the Titan, that big guy, I don't remember the name, Jhunjhunwala, whatever. See, that is the name, right? It's correct for them, but not for you. Because it is correct for them, please understand. Because it is correct for them, that is another reason. That is one very important reason because of which it is not true for you. Yes, they are the ones who will make money. You will not make any money eventually. Stock market is up, guys, right now. 2024 July going on. July 5th, 6th, 7th or something going on. Sell all your stocks now and quit the market. Pay the long-term capital gains tax and get out of it. This is your way to survive the brutal thing that is going to come. It will come. Don't think it will not come. It will come. I've made a video to sell Nvidia now. You should sell it as soon as possible. Anyway, my video is all about ensuring you know that how unbalanced the stock market profit and loss are. Okay? Just pointing to that you probably already know. Just making sure you know that this is a very grave thing. According to my CSF formula, you should never ever invest in stocks and think of it as a passive source of income. If you're doing it actively, perfect. If you're doing it passively, don't do it. Okay? Thank you, guys.